We begin with the effects of the conflict in South Sudan. Regional mediators in Western nations are considering plans to monitor crude revenues from the country's oil fields. Now, South Sudan sits on sub-Saharan Africa's third biggest crude reserves. Monitoring could involve putting oil earnings into an independently managed escrow account. Diplomats are arguing that this could avoid renewed conflict in the nation. South Sudan's oil output has tumbled by about a third to 160,000 barrels a day since fighting in December. President Salva Kiir's government has been selling crude and borrowed against future earnings to finance its programs, digging the nation even deeper into debt. As of June, the country owed $256 million to China's National Petroleum Corporation and another $78 million to oil trader Trafigura. The government plans to borrow about $1 billion from oil firms in the fiscal year 2014 to 2015, and this is equivalent to about a quarter of forecasted revenues in the country. The Confederation of Zimbabwe Industrials annual conference ended in Mutare in the east of the country on Friday. Now, the industrialists are calling this drastic measure to stop the bleeding of the fragile manufacturing sector. Now, currently, capacity utilization stands at just about 30%. And as Farai Mwakatuya reports, many local producers are being pushed to the brink by a flood of imports.
Delegates were unanimous that some bitter medicine needs to be administered to heal the ailing manufacturing sector. Among the radical measures that were proposed was a controversial ban on imports for products that can be made locally.
Close the borders for selected commodities, and when you would like to open up the borders, it must be done cautiously and from a calculated approach. Give your industry 5 years, 6 years of protection, of support, and you will see an economy reindustrializing. We cannot be reduced to an economy of being merchants or being wholesalers.
Such a policy could breach international trade agreements that Zimbabwe signed up to. But it's been argued Zimbabwe is partly in the situation it's in as a result of failing to enforce those very agreements.
Let's have a reciprocal arrangement. If, for example, South Africa wants to bring dairy products into Zimbabwe, by all means, under the banner of SADC, do so. But reciprocally allow the Zimbabwean economy also to be into South Africa on a reciprocal. But if it is not on a reciprocal basis, so it's a one-way traffic, and that's what should be closed off.
The cost of doing business here is high and is being fueled by unfavorable taxes and tariffs. The National Revenue Authority has been battling to achieve its targets due to a shrinking tax base and is imposing punitive charges on the few businesses that are still afloat. Industry has implored the authority to look at increasing efficiencies, especially in plugging leakages where imports are concerned.
Issues to do with the porous border, I think it is an issue that was discussed at length. We need to have mechanisms of how we can control the cross-border, and so that we don't have unnecessary imports coming into the country.
But perhaps the biggest debate was around the country's currency regime, which makes Zimbabwe unable to compete against players from other countries in the region whose currencies are much weaker than the US dollar.
The proposal was made that we need a flexible currency, whether it's a third currency, as it were. But the key principle is that people should not be forced to abandon the hard currencies that they are using.
The government is touting its Zim Asset Economic Blueprint, and the proposed resolutions of the CZI Congress could support its success. But the key issue remains in implementing the proposed remedies, which have been articulated in the past but not followed through. Farai Mwakatuya, CCTV, Mutare, Zimbabwe.
Olanason Limited, an Indian food company, plans to invest up to $20 million in a meat processing plant in Ethiopia. Now, the firm seeks to take advantage of a large population of naturally fed cattle and sheep. The Mumbai-based producer has been allotted land in Adami Tulu in the Oromia region south of the capital of Addis Ababa. It plans to build a facility that will produce some 70 metric tons of meat products per day. The Horn of Africa nation estimated livestock populations include 49 million cattle, 25 million sheep, and almost 22 million goats. All of that directly contributes to around 17% of the country's GDP. Now, according to the Ethiopian Agricultural Transformation Agency, exports earn the country about $150 million per year. Another $300 million worth of livestock may also be exported illegally. Looking now at how the African markets that we track here for you are ending this Friday. Specifically, let's look at Nigeria, where yields on Ghana's government debt have risen above the average in sub-Saharan Africa since January. Now, this is reflective of the government's struggle to bring down a stubbornly high budget deficit. The country's currency has slumped more than 40% in this same period, and Nigeria plans to issue its third Eurobond in August to raise up to $1.5 billion for government finances and to bolster its currency, the cedi. And when we come back, 50 African leaders head to America this weekend for the first ever U.S.-Africa Leadership Forum. We bring you an in-depth preview and analysis of the summit.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
The rebasing of Nigeria's GDP has been a long time in coming.
The information provides us much more scope to know what the structure of the economy is.
Welcome back. You're watching Global Business. Now, economists across Africa say that trade partnerships between America and the continent, like AGOA, have so far failed to meet Africa's goals because of restrictions. Now, through the upcoming U.S.-Africa Leaders Summit, the continent hopes to negotiate for a better deal with the U.S. Now, this would include the U.S. opening its markets to more African products and increasing investment uptake on the continent. The U.S.-Africa trade has so far been based on Africa sending raw material through limited market access, with the U.S. enjoying better benefits. Now, countries like South Africa, Nigeria, and Lesotho have benefited from this trade. Africa now wants more, and via the U.S.-Africa summit that's happening, has planned to gain much more than before. Joining us for more insight and analysis on what we can expect next week at the upcoming U.S.-Africa Leadership Summit, we are joined by Kelly Lemon, who's live for us in London, Yasser Hakim, who's live for us in Cairo, and Daniel Renches, who's live for us in Washington, D.C. Thank you all for joining us. Daniel, if we can start with you. Currently, the U.S. is the third amongst Africa's major trading partners, far behind both the AU and China. What are the administration's plans for the three-day summit, and how could they help bridge this gap?
Well, certainly in the period after the financial crisis, the issue of jobs in America has been front and center. So President Obama and his team have used the notion of African growth to explore the possibility of increasing the amount of trade that they do with Africa and therefore increasing US jobs. Certainly, I think there's an awareness of the level of expansion of Chinese engagements, and certainly European as well, because they're also a massive trading partner. So I think, they're going to have an entire day dedicated to this, a business summit in which billions of dollars of representation of many of the top US companies and African companies will be there, ready to discuss the possibility of doing some major deals. You've got figures like Michael Bloomberg and Bill Clinton coming to make speeches, but at the same time an emphasis on trying to get down to business, roll the sleeves up and try to make some deals.
All right, Yasser, if we can go to you. Although Egypt's President Abdel Fattah al-Sisi will not be in attendance, he is sending his envoy. Now, what is Egypt's expectations from this summit?
Yes, the Prime Minister is representing Egypt, and Egypt needs a lot of investments into the country. There's a lot of rebuilding happening now, infrastructure projects, mega projects such as the Suez Canal, such as sewage systems, and a lot of money needs to be put into the economy, with high unemployment records reaching around 15–16%. Egypt needs a lot from the United States, especially in investments. The US is a big investor in Egypt, but the Egyptians need more at this point. And I think that the Prime Minister will be going with projects in hand and showing these projects to the businessmen there and the American administration, telling them, why don't you come here and put money into these projects that will hit the country.
All right, Kelly, moving to you. This summit will be the largest concentration of African leadership in Washington. Now, what kinds of results are investors looking for from this summit?
Well, as the others have said, the key focus for investors will be links made with businesses. At this summit, African leaders will be looking at what lessons and infrastructure they can implement in Africa, and they'll be looking for companies to deliver those solutions, and that's what investors will be looking at in the short term. Leaders have stressed the importance of transactional events where business will be done, and that's what analysts are expecting. Now, the EU is a key trading partner for Africa, and improved infrastructure will enable better growth, something investors will be watching closely. But in the short term, they want to see what business is going to be done.
Daniel, if we can go to you. Amongst economic issues to be discussed, the possible extension of AGOA beyond 2015. Now, what can Africa expect from these discussions?
Well, the problem with AGOA, as you were mentioning, was that a large volume of the trade within it is to do with resources, natural resources like oil, energy products. But that's not because AGOA itself legally is confining the amount of products. In fact, there are massive numbers of products that are not being utilized. And those tariffs are basically lowered down to nothing, so that African leaders have some kind of a jump up to access American markets. They will be exploring how to bridge those barriers that still exist, for example, the infrastructure barriers, the differences in the sort of legal mechanisms that exist and create barriers to trade. But essentially, I think also the Americans are going to be demanding from the African government some sense of reciprocation. The Europeans are now doing deals where they're having tariffs lowered to bring European products into Africa. I think the Americans now are going to be pushing back a bit and saying, well, we need to provide something for the American people where we have more access to African markets going forward. Back to you.
All right, Yasser, let's move to you. Compared to similar summits held by China and the AU and Japan, what is Egypt looking to gain from this U.S.-Africa summit that they haven't found in previous gatherings?
Well, politics will play a game in this. After the ouster of former President Mohamed Morsi, there was a lot of companies and politicians and countries that started to shy away from working with Egypt, to wait and see what will happen in the country before putting money in or investing or opening trade. And I think that's what happened with China before, and many European countries as well, and the US. The Egyptians now are trying to tell them it's time to come back, to open the borders and to open trade, and we need investments and trade between you, both of sides, because right now it's only been promises, and what the Prime Minister will try to do is push some leverage and tell the Americans to come back to Egypt and try to invest again, and also to open their trade barriers with Egypt. And by the way, the president will not attend, but he sent a signal there. He did not say why he will not go, but at the same time he announced that he will be in Russia at the same time, and also the Chinese foreign minister will also be in Egypt this week to talk about business. So I think the Egyptians now are trying to say that maybe we should walk to the other side if the US does not give us enough or what we need economically, then we move to the Russian side and the Chinese for more cooperation at the same moment.
Okay, Kelly, what are investors looking to take away from this US-Africa summit that they didn't get from summits like China, the EU, or Japan?
Well, this is more of an and scenario for investors rather than an or scenario. Now, there's been a lot of bridges built this year regarding Chinese investment, particularly here in the UK. It's not news that Africa is growing at a substantial rate, has a young and growing workforce, a massive window of opportunity as the region builds and improves its infrastructure. And those attending the summit want to be a part of it. Now, Jim O'Neill, who famously coined the BRIC acronym, has now coined the MINT acronym, with Nigeria playing a key role for investors moving forward. China's been the engine of economic growth through this recovery. Now investors are looking to build on that and strengthen ties with the world's next engine. So it's not really a case of or and, it's both really.
Okay, and lastly to you, Daniel, what does the administration say to those that say that this summit is just a response to Beijing's campaign on African investment in trade over the last decade?
I think initially there was a jolt of energy here in Washington because of what China has achieved in Africa. But at this point, I think things have gone too far towards a commitment towards trying to drum up trade from a US perspective. And they don't see it as a zero-sum game. They see there being opportunities and benefits for the Chinese, for example, investing in infrastructure to make it easier for everybody to invest in Africa. I think, though, at this summit, the real emphasis is going to be broad-based investment, qualitative investment, in which the US goes in with long-term investments, for example, in the energy sector, but then backs it up with qualitative advice, support, and make sure that all areas of government here in Washington are involved and engaged. So that's the unique selling point that the Americans, I think, are bringing to the table, trying to say this is broad-based and qualitative.
Looking forward to see how this all plays out in next week's summit. That was Kelly Lemon live for us in London, Yasser Hakim in Cairo, and Daniel Renches in Washington, D.C. Thank you all for joining us. Now moving to Ghana, where the country's president, John Mahama, says that his government will soon take what he calls a bold decision to urgently resolve the challenges facing his country's economy. Now, the government has come under criticism for the rising budget deficit, high inflation rate, and steady depreciation, and other challenges facing the country. But the president believes that the Strategic Advisory Group, which he chairs, will put in place measures to stop the decline. Mahama has said that the committee will meet continuously to discuss how the government can create a broad alliance with the chairs of key economic sectors. Over the past few years, Ghana has been growing at an average rate of 5%, but it has since slowed and inflation has skyrocketed to 15%. The cost of fuel and food continues to rise, making it difficult for Ghanaians to make ends meet. Let's take a quick look now at commodities to see how they're trading. We'll look specifically at crude oil, which held near $106 a barrel on Friday as ample supplies continue to drag on prices. Now, this is just a day after the benchmark posted its worst monthly performance since April of 2013. Oil investors say they are less worried now than a month ago about the risk to oil supplies from countries in civil turmoil, despite having fighting in many of them. In Libya, oil output remains around 500,000 barrels per day, following weeks of clashes between rival militias. Coming up, we explore a device that's keeping East Africans powered and connected to the internet despite the poor infrastructure available. Welcome back. You're watching Global Business. Now, power blackouts are pretty common here in Africa and as well as in many developing countries. This has been a result of underfunded electricity-generated plants and poorly maintained infrastructure. The problem affects daily business activity as well as internet connections that businesses rely heavily on. In tonight's Grassroots segment, CCTV's Robert Nagila reports about how the company has developed a solution to both problems.
Often described as the economic hub of East Africa, Nairobi is fast becoming the IT hub of the region.
And when it comes to tech startups, there's no better place to start than here in this building behind me, where some of the leading companies in technology are to be found.
It is here on the second floor we find Eric Husman, the CEO of Brick, a company behind a revolutionary device that allows you to stay connected to the internet in areas where infrastructure is unreliable or unable to support the network.
The idea around the Brick was, if we were to redesign the router made for Africa, what would it look like? And it started with this idea, well, we need to have onboard power. So the Brick comes with 8 hours of power in it. So even if the power goes out for the whole day, you've got a full working day ahead of you. It comes with a modem in it. So you can put in a SIM card. And if your normal Ethernet internet connection goes down, it'll fail over automatically to SIM card.
The device is able to connect multiple networks and provide connection points for other devices with enough backup power in case of a blackout, a common phenomenon in Africa.
It's not only internet for people, but it's internet for things. So with our GPIO expansion, you can connect your own board to it, and now you can connect sensors, hard drives, cameras, fingerprint scanners, whatever you want.
The idea behind the device is to design a product that provides unique solutions at a cost-effective price to local problems. And there's no better place to see this at work than 3 floors above Eric's office at the iHub, a place where tech minds come together to find solutions to everyday problems through technology.
The primary reason for the iHub opening up in 2010 was to create an environment where people in the tech industry, developers, engineers, software designers, creatives, even investors and business people, legal guys could meet and connect, interact. Think of it as a tech coffee shop.
iHub provides the facility and expertise to allow entrepreneurs to test their limits with research, consulting and supercomputing sections available as the need arises. The atmosphere here is relaxed, conducive even for the type of work done here. There's even a foosball table and a coffee shop to cool off. But the biggest hurdle for most startups is finding the resources to set up shop. Financial expert Ali Kansachi says, to succeed, many startups have to seek funding in Europe or the United States.
We don't have the sophistication in our capital markets to fund that. I mean, bear in mind, there are few countries which have really got that right. Somewhere like Silicon Valley is a clear example in the US. So I think in this age of collaboration, in this new flat world, where to succeed, I think people and countries have got to be globally fluent.
For example, iHub is funded by Ushahidi, a non-profit company developing software for information collection and visualization. Most of the funding comes from the United States, a project Eric is heavily involved in. And while Brick is designed and tested here in Kenya, it's not manufactured locally. Eric says the right policy framework is not in place in most African countries to encourage startups.
I can generally sell the Brick in almost every African country cheaper by bringing it in completely already made than by assembling it in a factory in that country.
But like most startups across the African continent, they're not waiting for laws to change. Taking matters into their own hands, hard work, innovation and initiative. In the hope, the right policies will soon play catch-up in an industry that keeps changing by the minute. Robert Nagila, CCTV, Nairobi, Kenya.
Looking now at how your money is trading, let's look specifically at Kenya. The country's banking stocks pushed the main share index higher while the shilling held steady. Moving over to South Africa, the rand fell by over 1% against the dollar, failing to gain momentum from a surprise narrowing of the country's trade deficit. That's it for this edition of Global Business. Remember, you can send us your feedback to Global Business Africa at cctv.com. You can visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle at CCTV News Africa. I'm G2 Abraham. Thanks for watching.